Thank you, Charles. Thank you.
Thank you.
Thank you for your question. Next question is from the line of Asiya Merchant with Citigroup. Your line is now open.
Great. Thank you for taking my question here. The order pipeline that you guys talked about is pretty strong. And so if you could help us understand, what's the components that are contributing to such a strong order outlook that you have embedded into your guidance? And if I may, you guys talked a little bit about this revenue guide that you guys are exceeding sequential growth expected post fiscal 2Q. If you can just also help us understand how we should think about gross margins as we proceed through the year and the OpEx to support such a strong revenue outlook. Thank you.
Yeah, GPU for sure contributed most revenue, right? Kind of like a Blackwell Ultra and kind of like a AMD MI 350, 355, and Blackwell B300 and the RTX, right? So indeed, lots of strong product line are driving our revenue. And at the same time, again, for the best interest to our customer, we try to provide a data center end-to-end solution, including DCBBS, including management software, on-site deployment and service. So to bring a one-stop shopping for customers' advantage and also grow our profit margin. And David, you may add something for long-term.
Sure. Okay, yeah. So on the gross margin question, we're going into a quarter where we are ramping one of the largest clusters in the world. We're ramping a new product line at mega scale, and so therefore we're being a little conservative on the margin because we will have higher costs as we ramp production and shipment. So we're just giving guidance for one quarter out, but we did mention that as we go on throughout future quarters, we're expecting to improve for the reasons that we laid out. On the OpEx side, you can tell from looking at our historically, we are that sub 5% OpEx, and we expect that to continue. But we will continue to increase our OpEx in order to strengthen our infrastructure.
Yeah, I'd like to add two more areas. One area is traditionally our revenue was about $5 to $6 billion quarterly, and now we are growing to $10 billion quarterly. So that for sure increase short-term challenge, and that's why we have to leverage USA, Taiwan, Malaysia facility, and that kind of involve hiring lots of new people, train our people, and add a facility. But once this much higher capacity facility already in this quarter, December quarter, we will be able to service large customers in USA, in Asia, and Europe, truly global major supplier. And by that time, for sure, our resource leverage will become much more efficient. And second is our DCBBS is getting mature and getting ready to service more customers, to bring more value to customers. And that, I believe, will grow our profitability.
That's great. If I can just on the orders that you talked about, $13 billion, I know you provided it at a chipset level. I think I was looking for just customers that are constituting that $13 billion. If you can just share some insights into, how percentage of customers that are in there that contributed to such a strong order book for $13 billion. Thank you.
So they constitute some of the best customers in the world. I'll say that we had 2 10% customers this year. We ended last year with 4 10% customers. We always welcome new large customers, but I know we don't have any. We usually don't talk specifically about individual customers.
Yeah, but they are really a high profile, high value partner for long term. That's why we do such a big effort to greatly increase our capacity to support them. There are some of them, so we are very happy to enhance the support to those high value partners.
Great, thank you.
Thank you for your question. Next question is from the line of Ananda Baruah with Loop Capital. Your line is now open.
Yeah, good afternoon, guys. Thanks for taking the question. A couple, if I could. Charles, the midpoint of the guide for December is $10.5 billion, and the updated guide for the fiscal year is at least $36 billion. And so if I model out $10.5 billion for each March and June, I get to sort of just over $36 billion. And you're talking about a lot of $13 billion in GB300 product wins, a lot of good activity going forward. So I guess my question, Charles, is first one is, are you being conservative? Is there conservatism baked in to the implied March and June quarters, or should we expect some flattening out of revenue in the coming quarters? And then I have a follow-up. Thanks.
Yeah, thank you for the question. Yeah, this is the first time we grow our revenue to about more than $10 billion a quarter. So we are very excited about it. So now we already expand our capacity global and train our people and have all our facility ready. So from now on, we are ready to be a really big supplier around the world. And with Blackwell getting mature and ERA quality, everything is promising at this moment. And so we feel very excited to have at least $36 billion. And hopefully it's a very conservative number. And at the same time, we are doing our best to grow our DCBBS total solution, because that's the unique data center infrastructure tool to help customers build a data center quicker, better, save energy and save money. So overall, I believe with DCBBS become more mature, our profitability will improve.
And Charles, I know we're talking fiscal year. We're talking fiscal year expectations, but do you anticipate the strength to continue through the calendar year? There's been a lot of large deals with neoclouds announced lately with large AI labs and hyperscalers, and that's your sweet spot customer base, the neocloud. So should we anticipate this kind of strength without giving a guide, but could this strength continue through the balance of the calendar year?
Yeah, indeed. Our capacity is in different scale now, as you know, right? So 36 billion is a very conservative number. So we believe we will continue to grow quickly, continue to lead the market. We use not just technology, but also the market share.
I appreciate that. Mike, just one quick clarification with David here. David, just to your prior comments about gross margin improvement through the year, is that to say that December quarter is the low watermark gross margin quarter for the fiscal year? Thanks. That's it.
Yeah, that's fair. We are, as I mentioned, this is a quarter of first impression for us on standing up, on doubling our revenues in one quarter. And so we're doing everything we can to improve our margin, but we're not making forecasts out beyond December quarter.
Appreciate it. Thanks a lot. Thanks, guys.
Thank you for your question. Next question is from the line of Ruplu Bhattacharya with Bank of America. Your line is now open.
Hi, thanks for taking my questions. David, can you remind us how much total revenue can your manufacturing footprint support today? And when it's fully utilized, what would that number be? And at what point do you decide to add more capacity, such as adding a new plant? And if you can weave in any update to the Malaysia plant, is that now building racks, and what's the status of that plant? And I have a follow-up.
Okay, so maybe I'll let Charles talk about capacity, but we've mentioned that we have a rack capacity of 6,000 racks per month worldwide, and so I don't think that we have spoken as to what that value is, but I can say that in Malaysia we are starting to stand up more in terms of their production. And we expect it to contribute greatly going forward. Let me see. Did I answer? What other questions did I miss there, Ruplu?
Yeah,
go ahead.
Yeah, I guess we try to be a very, very conservative because with Blackwell Ultra is still brand new, right? So we had to make sure we ship exactly the best quality, the most reliable system to customer. And that's why we spend a lot of time to burn in our solution. And that's why we build up such a huge capacity. If you time 3,000 liquid cooling tower per month, and you time 12 months a year, and each rack, for example, $3 million. So the number is more than $100 billion, though. So yes, if everything smooth, our capacity is like $100 billion range now. But we try to be conservative and try to design carefully, burning carefully, make sure all the product we deliver to the market is exactly the best in the market.
Right. Thank you for the details there. As a follow-up, David, can I ask, you have this large project ramping over the next several quarters. How should we think about working capital and cash conversion cycle and free cash flow? And at what point would you need to tap the markets to raise more capital? Thank you.
Yes. So we've maintained about $5 billion on average, and obviously, when you double your revenues, that's not going to be enough working capital. So as we announced, we did put an accounts receivable sale program in place, which allows us to factor our receivables up to $1.8 billion. And we also have other programs that are being put into place to meet our needs over the upcoming quarters. So we have no doubts about our ability to execute on those programs.
Yeah, to add something,
okay, thank you for
we definitely have a capability to service more customers with a much higher volume, but we will control the revenue based on our cash flow.
Okay, thank you for the details.
Thank you.
Thank you for your question. Next question is from the line of Nehal Chokshi with Northland. Your line is now open.
Yes, thank you. Great demand there, and understandable that ramping up a new customer on the B300s. But I think it was maybe a year and a half ago, that it became apparent that you guys were helping XAI Colossus 8 plus Colossus 1 ramp up, and that was diluted to margins at that point in time. The rationale was to get this lighthouse customer and demonstrate the Supermicro's engineering capabilities. Why is it necessary to basically do a rinse and repeat of this proof of Supermicro's engineering prowess?
XAI for sure a very good partner, and whenever we have a chance, we try to work with them to learn something from them and to offer our best service So yes, XAI will continue to be our important partner for long term. And again, our capacity is huge and capability is much bigger now, but we will be selective to grow our revenue based on our cash flow.
And Nehal, what I would add is that what we are doing is that we are validating each time, as we did a year and a half ago, and now that we're the premier provider of advanced DC-BBS solutions and AI data centers. So we gladly step into that role, and we continue to get additional business, each quarter as a result of these successful installations.
Thank you very much.
Thank you for your question. Next question is from the line of Quinn Bolton with Needham & Company. Your line is now open.
Hey guys, this is Shadi Metwali on for Quinn. Thanks for letting me ask a question here. My first question is on gross margin. I know you guys mentioned new facilities coming online and that possibly being a tailwind for gross margin over time. So we're just wondering if we can get some more color here on the timing and maybe just the overall impact of these new facilities would have.
Yeah, as you know, we need to invest in Malaysia, in Taiwan, in USA, all our locations. So make sure we have enough capacity to bring the best quality product, most optimal to the market. So in December quarter, we spend a lot of money to establish the foundation. And going forward, now we have those capacity and capability to grow much larger scale business.
Great, thank you. And then my follow-up is on the Super Micro federal program you guys announced intra-quarter. Was just curious if we can get some more color on this program and maybe what led to the creation of it and how this initiative could position Super Micro for government contracts going forward. Thanks.